All right, hello everybody. Welcome back into the NASDAQ Option Superstars program. I told you here yesterday that I would record a video walking through our open positions, and that's what I want to do here next. But I was not expecting such an active day today. We had a lot going on. If you are a newer student, you probably got bombarded with alerts today. Don't want you to think that that's a normal session. I mean, to have 5, 6 alerts come through all in one day, that's not very typical for us. We just had a big market move here today. Markets up large overnight that continued pretty much throughout the entire session today. We finally broke out of the range that we've been talking about. So we're just in a super strong move again over the past 4 or 5 trading days. So I don't want you to think that this is normal. We typically send out 3 to 5 new trades each week. So you'll typically get 1, maybe 2 new trades on a session. We just don't typically have this many trades closed out all at once, but that's just what the market gave us here today. So I want to cover what we did today, the closing trades. We did initiate a new position on WIN, which I'll cover here as well. And then we'll take a quick peek at our remaining open positions as well. So a lot to get to. And with that, let's go ahead and dive in. Let's talk about our closing trades here today. First, we closed out of 4 winners and a loser. We closed out of 4 winning credit spreads, and then the long put on AMD ended up stopping out. Now, I've had some questions as to why we closed out the credit spreads where we did. You can see we closed out of Xilinx, ADSK, CrowdStrike, PINs. Couple of different reasons. Number one, when I initiate a credit spread, my initial target zone is always when I can close out of that position and keep 50 to 75% of whatever I collected when putting the trade on. That's really where I'm looking to take action. I always start out at that 75% number. The question came in, why wouldn't I hold the expiration? Well, you guys have seen over the past number of weeks, we've had very little follow through. We get these moves intraday. We get enough of a move to give us setups and they trigger in, and then we don't get the follow through into day 2, 3, 4, 5. We've talked about that. The problem with holding to expiration is the closer we get to expiration, the gamma risk picks up. And what that means is the gamma represents how quickly an option is going to react to changes in stock price. An option is going to react faster the closer we get to expiration. We've had some nice winners here. We decided to close these out because if I hold for the next couple of weeks, I run the risk of letting these 75% winners turn into losers if I hold too long. If we get a reversal over the next week or so, that would cause those nice profitable trades to change in a hurry. I fully understand the closer we get to expiration, the theta also picks up. The time decay picks up. That helps us with the credit spread. Well, that's true, but it's not enough to offset the gamma if you get a directional move against you. That's why what I have found is if we can close out these trades and keep between 50 and 75% of our max profit, that's going to give us the best results over time. That's why we closed out of a handful of these trades today. Now, CrowdStrike didn't quite hit the 75% number. The reason we closed out of CrowdStrike today is we wanted to book that nice profit before earnings. Earnings came out, or they'll be coming out this afternoon, I should say, after the close. I do not want to let a nice winner, we had a $90 profit there. I didn't want to let that turn into a losing trade just because of the earnings release. I'd rather book the profit and not have to worry about the mess that earnings can be. So, some of you mentioned, why did we close those credit spreads out when there's still some profit to be made there? I just didn't want to hold the additional risk and have those trades turn around on us. I don't mind paying the closing commission to take those trades off. And if you're using Tastyworks, it's a no-brainer. They don't charge a closing commission anyway. So you might as well just take the trades off, free up the capital, and move on to the next trades. So nice little stretch there on the credit spreads. We closed out of 4 winners today. And then AMD, unfortunately, that trade flat out didn't work. We had some nice progress initially on the downside after we put the trade on, but we just didn't get the follow through that we were looking for. So we took that trade off here today. Let's take a look at some of our existing positions. You can take a look at the short call spreads here. Remember what I've said in the past. With the short call spread, the goal here on all of these is for the stock price to stay below our short strike. And our short strike is always going to be the first number listed there in the position line. So on Chewy, we need it below 35. VXX, we need it below 27 and 28. We've got 2 different positions on there. Amgen, we need it below 207.5. ATVI below 49 and Roku below 175. That's what we need to have happen. Now, with this market starting to head higher here, is there a reason to be concerned here? When you sell a short call spread, it's a neutral to bearish position. I want those stocks to move lower. Am I concerned that this market's going to move higher here? Not yet. The only one that's really given us fits here is ATVI. And that one, we're kind of in defense mode. I'm not saying it's going to turn around to be a winner at this point in time. The stock is very overbought. What I'm looking to have happen here is to see if we can get a reversal back lower and potentially take a smaller loss. The chances of us booking a profit on that trade probably pretty slim at this point because it's moved against us pretty much since day one when we put the trade on. On the rest of these, let me go ahead and drag the spreadsheet off the screen here. Let's go ahead and work through these. Let me go over to Chewy here first. So Chewy, we sold the 35-37 call spread out in the September 20 monthly options. Those are the ones that now have 15 days left to expiration. I need Chewy to stay below 35. It's right now currently sitting at 34. Well, we sold the spread for 65 cents initially. The spread's now trading for 70 cents mid-price. Why are we down money on this trade? If price action needs to stay below 35, it's at 34 now. Why aren't we up money on this one? The problem here is when you sell a call spread like this, we're always selling an out-of-the-money call, which we did with the 35 strike. If we don't get a big directional move to the downside immediately, it turns into more of a play on time decay adding up. And with 15 days left to expiration, there has not been enough time decay that's added up in our favor yet to turn this thing profitable. If we sit right here at 34, okay, and don't do anything, don't move higher, don't move lower, we're going to make money over the next 15 days. This thing will turn into a profitable trade. The only move that's going to really sting from here is if we get a move above 35. Right now, I'm not expecting that. Let me go ahead and pull up the chart of Chewy here as well. You can see that this market is overbought. We can see the pulse indicator down at the bottom. We've got 6 yellow bars in a row indicating that we are at an overbought condition. We're between a 1 and a 2 standard deviation channel move. So I'm still expecting Chewy to move lower. My outlook hasn't changed. That's why I'm going to hold this trade longer. I still think there's a very good chance that we can book a profit here over the next 2 weeks. We are going to continue to hold. We're going to watch it closely. We just need Chewy to stay below 35. So we're still okay here. I know it's a little bit misleading. You're saying, man, we're below 35, but I'm not making money. It's just because the time decay has not added up enough for us as of yet. We have 2 VXX trades on, and these trades have been underwater. We've been talking about these in the Slack group. Going back a couple of weeks, we've had some questions, from people concerned on these. Are these trades really going to turn around for us and help us out? Well, credit spreads recover much faster. We've talked about that, and this is a perfect example of that happening. We sold the first one. We sold the 27-29 call spread out in the September monthly options, again with 15 days left, and we collected 53 cents. It's now trading for right around 40 cents. So we're up money. We're up about 13 cents on the trade. We went from being pretty decently underwater on this trade to now we're in a small profit. I'm still targeting. On this one, I'm targeting between 13 and 26 cents. If I can buy it back for between 13 and 26 cents, that's what I'm looking for. So I still need a further move to the downside on VXX. That's why we're going to continue to hold it over the next few days. But just it goes to show staying patient with a credit spread. I know it's difficult. I know we're all emotional when it comes to trading. It's difficult to hold on to these trades long enough. But if you do, remember that numbers are going to work out in our favor. You can typically hold on to trades longer than you think initially because that time decay is helping us. So it's starting to recover for us on VXX on that first trade. And then the second one on the 28-30 call spread, we sold this one initially for 49 cents. It is now trading for 31 cents. So we've got about an 18-cent profit on this one. This one, again, was deep underwater here just a couple of weeks ago. It has started to recover pretty quickly for us. So we've got a couple of partial winners there on the VXX trades. Nothing needs to be done there. I still like volatility on the downside. We've talked about that in previous videos. Volatility has stayed bid. It stayed elevated longer than normal. We've seen the VIX high for a period of the last 3-4 weeks. Doesn't typically happen all that often on the VIX. In most cases, you get a couple of days, maybe a couple weeks of elevated volatility, and then it contracts. So that was my concern. I wanted the market to break lower, but I mentioned it in previous videos how my concern was volatility. We saw that spike in volatility, but we really never saw any type of selling on equities. And that was my concern going forward. And lo and behold, we've seen equities break to the upside here. So fortunately for us, we've given ourselves enough time. We still have 15 days left. So all we need is one more push to the downside on volatility, and we'll be able to close out of both of those VXX trades for profits. Amgen. Let me go ahead and pull this one up. We sold a 207.5, 210 call spread. We did so initially for 91 cents. It's now trading for $1.22 mid-price. This thing's been all over the place. We were deep underwater here just a few days ago. It has started to battle back for us. Obviously, today being up $1.30 didn't help. But we need this thing below 207.5. And we've got 15 days left to expiration. So I still like the trade. We need a push to the downside. Don't have any wiggle room left here. We do need a sell-off, but we only need a 15-cent sell-off, and we're right back to where we need to be. So no reason to take the trade off as of yet. So we'll certainly let you know when we're taking action on our side. But here's another example. We go from deep underwater. We're still underwater, but it's already battled back for us in a big way. So we'll see if we can get this thing back into profitable territory over the next few days. ATVI. Go ahead and pull this one up if I can find it here. I don't know if I've got it saved on this computer. I do. It's right there. All right, so we sold the 49.51 call spread out in September. We collected 58 cents to put this trade on. This one is certainly deep underwater. We need this thing back down below 49. It's now at 54.5. So what do I do here with 15 days left? Again, as I mentioned a few moments ago, we're in defense mode here. I'm not expecting this thing to turn back and go back into profitable territory. But what I'm doing, what I'm looking at here, if I go over to the chart, you'll see it. If I can pull it up here. It might be on my other workspace. So I've got to pull up the other workspace here. So what I want to show is the market is still incredibly overbought. I still like ATVI on the downside. I'm not saying it's going to go all the way back down below our short strike, but when you look at this chart, we now have green bars. We're between a 2 and a 3 standard deviation channel move on the upside. Chances are this thing is nearing an extreme. We saw a nice little reversal candle here earlier today. I'm not saying that we're going to have enough time on this trade, but we may be able to, if this thing can continue to roll back over and pull back for us, we may be able to limit the damage. And then I'll be looking for a second trade on ATVI here going into next week. We'll add on a second trade trying to battle back faster with that second position. So I still believe this chart is incredibly overbought. That has not changed. We're just going to most likely run out of time on this current trade. So we'll continue to hold the current one as is, and we'll potentially be looking to add on a second position here over the next few days. Roku, our new trade from yesterday. Roku is all over the map today. So we sold the 175, 180 call spread out in the September monthly options. We did so and we collected $1.73. We've got a small profit on this one already. It's trading for $1.45, so we got about $30 worth of profit on this trade so far. We're targeting between 43 and 86 cents, so we still have a ways to go. We want Roku below 175. If we can get some further selling here over the next few days, that would increase the speed of the profit moving in our favor. If we just sit right here, we can make money from time decay. We're just going to have to hold longer. So ideally, in a perfect world, on all of these short call spreads, any type of selling that we get over the next few weeks will be lovely for us. Let's move on over to the short put spreads. And I apologize for this turning into a longer video, but I want to move through all these individual trades so you know what we're expecting. We've got a couple of different positions on Square. The first one is the 60.58 put spread, and we're using the September 13 weekly options. We put this trade on initially, and we collected 54 cents. My target zone is between 13 and 27 cents. We're right inside of that range. Why didn't I close this trade out earlier? Because this market is now moving higher. Square's had a really nice move to the upside today. I'm trying to get closer to that 13 cent level. I've got my closing order in place at 13 cents. Now, if we change that order, if we change that price, we'll certainly let you know. Inside of Slack, we'll notify you in the NetPicks app as well. But right now, we've got a really nice profit on the first Square trade, getting very close to a level that we may need to take action on. any type of a higher open on Square tomorrow, we should be able to close this thing out and book the profit. So right now we've got about a $34 profit per spread on the Square position. The second Square trade that we have on is actually out in the September 27 options. And let me go ahead and load that one up. And this one is the 59.57.5 put spread. And we collected on this one 45 cents. It's now trading for 24 cents. So we've got a nice little $20 profit on this one as well. Targeting between 11 and 22 cents. So we're getting very close to entering that profit range. I have my closing order on this one at 11 cents. If we can continue to get one more push higher on Square, we should be able to close these things out within the next couple of days. At the very least, tomorrow on any type of a higher open, we'll close that first one out, try to reduce some risk there. So be looking for that closing alert here tomorrow. But so far, so good on both of the Square trades. Uber, another one that was giving us trouble. It still is giving us trouble, but we've started to battle back a little bit here. Nothing extreme, but up 50 cents. We sold this one initially for 63 cents. We're down about 40 bucks on this one so far. We need price action above 34. So I need about $1.50 rally here to the upside over the next 15 days. Just like ATVI, I'm not saying this thing is going to turn into a big winner, but we're kind of in defense mode. If we can, see this thing continue to rally for a couple days, potentially take this thing off for a smaller loss or maybe even a small profit, we'll just see what happens. We still have time on our side here. With 15 days left, that theta is going to help us. And if we get any type of a move higher, it'll help us recover quicker. So again, the chances of this thing turning into a full winner are probably pretty slim, but we'll continue to hold it. See, nothing has changed. If you look over at the chart, let's see if I've got Uber up. Let me just switch the symbol here. So if you take a look at the chart, you can see that we're still oversold. We still have a whole series of yellow bars on the pulse indicator. So the chart's screaming oversold. We're finally starting to get some movement to the upside here. We'll see if that continues into the next couple days, and that is the basis for continuing to hold the trade on Uber. UAL, another short put spread that we have on. We sold the 83.81 put spread out in the September monthly options. We sold it for 50 cents. It's now trading for 35 cents. We've got about a $15 profit on this one. I'm targeting between 12 and 25 cents on this one. So any type of a higher open tomorrow, we may be able to close this one out as well. We just need price to stay above 83. If it does, we'll see us get to that 75% level on the trade. So we'll continue to hold UAL. That brings us to the win trade, WYNN. It's the new position from today. I'll start out on the chart, walking you through what is the thought process here on the chart of WYNN. So you can see down at the bottom, we've got that whole slew of yellow bars. Again, when I see the yellow bars in the pulse indicator, it indicates between a 1 and a 2 standard deviation move on the downside. It's oversold. My takeaway from that is price action, chances are it's probably going to consolidate sideways or even move higher. And that's exactly what's happened. Notice what's happened since these yellow bars started printing on the downside. See how price action has started to consolidate? Now we're starting to roll back to the upside. This is a very typical pattern when we see it on the pulse. The reason why I didn't want to buy a long call here is we still have not seen price action confirm enough on the upside. If I buy a long call, the only way I make money is if that stock moves higher very quickly. By selling a put spread like we did today, it's a more forgiving trade. I give myself 5 ways of making money on the trade, which I'll talk to you about in just a second. So the basis for the trade is the pulse indicator printing all these yellow bars. Price action finally started to move above these moving averages up top. That was the basis for the trade. And then going over to the trade page, we went out to the September 27 weekly options. Those are the ones with 22 days left. I didn't want to use the September monthlies here. I wanted that additional week. So I went out an additional week out to the weeklies. And then we went to the 108, 106 put spread. So inside of Thinkorswim, I right-clicked on the 108 puts, went to sell, selected vertical. It popped up an order down at the bottom. I can always adjust the strikes. I can click on the drop-down menus to adjust the strikes, and that's exactly what I did. I wanted to sell the 108 put and buy the 106 put at the same time. You had a range of fill prices anywhere from between 59 and 63 cents. I got filled at 59 cents. So if I click on confirm and send here, we're risking $141 to make 59. Very typical for us, right around risk 2, risk 3 to make 1, very normal. The reason why we're willing to accept that is we've got 5 ways of making money on the position. My break-even point's at 107.41. I just need price to stay above that level. Okay, so right now with price action at 111.33, I've got about a $4 cushion that this thing can move against me, and I'm still okay. The only move that hurts me is a big move below 107.41. Not expecting that because, as we just looked at on the chart, we're already oversold. So any type of a move higher, any type of a move sideways, or even a small move lower, I can still make money on the position. I also make money from time decay adding up and from volatility decreasing. Okay, so there's 5 different ways that I have of making money on the position. My target zone on this one, again, 50 to 75% of whatever I collected to put the trade on. That puts my target zone between 15 and 30 cents. Right now I've got a closing order working at 15 cents on this win trade. As always, we'll let you know when we're taking action, when we're taking the trade off. We'll send out an alert. So I don't want you to think that we're just going to leave you hanging out there. We'll certainly let you know when we're taking action on our side. All right, let's take one more look at the new win trade, and I'll show it to you in the Tastyworks platform. So let me go ahead and type in win in the symbol box up top. I'm going to click on the trade tab here on the left-hand side, and then I want to make sure that I have the proper expiration cycle selected. Really crucial there. You do not want to select the incorrect expiration. So remember, we selected the September 27 weekly options. I'm just going off of the alert. So I'm going to click on the arrow next to those weeklies. It's going to open up all the strike prices. You can always open more strikes up here in the upper right-hand corner. There's a drop-down menu where you can load up more strike prices. And then we want to sell the 108, 106 put spread. So to sell the 108 put, I'm going to go to the puts on the right-hand side. I'm going to left-click on the bid price of the 108 puts. It's going to box it in red, indicating a sell order. And then I'm going to left-click on the ask price of the 106 put. That's going to box it in green, indicating a buy order. Down at the bottom, it summarizes the order for us, where you can see down in the lower left, we're selling 108 put, STO stands for sell to open. We're buying 106 put, BTO stands for buy to open. We're doing this all as one trade. I can adjust the price right here in the middle. I can arrow up or down on the price, or you can just highlight over it and type in whatever price you want to place the order at. I can change the quantity here by clicking on the left and right arrows, and as I do, you'll see the quantity for the order is changing in the lower left-hand corner. You can change the order type. Anytime that I say sell to open in the alert, that's indicating a credit spread, so we want this set to net credit. In time and force, on any type of an entry order, we always want that set to a day order. If it's a closing order for a stop or a target, then we can change it to a GTC or a good till cancel, but in this case, we want to keep it as a day order. Once you have everything set the way you want it, just click on review and send, and it'll have the order in place. You should get filled pretty quickly when you place your if you place your trades at the mid price on most of the products that we trade, you should be able to get filled pretty quickly within a few pennies of that mid price. All right, so if you have any questions on this new win trade, if you have any questions on the all the closing orders that came through today, let me know. Send me an email. Mike@netpicks.com is the email address. You can leave a comment inside of the Slack group or inside the NetPicks app, and I'll be in touch right away. Right, so I'm going to go ahead and wrap this video up here. We'll be back with you guys on Friday as we wrap up the week and see if we can get another trade or two on. All right, enjoy your evening, and we'll talk to you guys on Friday.